Welcome back to Explain the Charts. Today, August 5th, 2025, we're diving deep into the intricate world of Intel Corporation, or Intel, a semiconductor titan currently navigating extremely turbulent waters. Intel stock has recently experienced significant downside, and its price action vividly reflects a challenging confluence of fundamental news and prevailing market sentiment. Our comprehensive analysis today will first unravel the most pressing current events and news surrounding Intel, providing essential context for its recent performance and the reasons for its struggles. Following this, we will transition to a meticulous examination of INTC's price charts across multiple timeframes, daily, hourly, and even 15-minute candles, to pinpoint critical trends, identify key support and resistance zones, and highlight crucial price levels for both traders and long-term investors. The ultimate goal is to equip you with a nuanced understanding of where Intel currently stands, the driving forces behind its recent movements, and what potential scenarios could unfold next in its journey. Let's begin by setting the stage with the latest news impacting Intel and its stock. A primary concern is the company's reported struggles with its cutting-edge 18A manufacturing process for next-generation PC chips. Reports highlight significant hurdles in terms of quality, which directly casts doubt on Intel's ambitious plans to regain its leadership in high-end chip manufacturing and directly compete with powerhouses like TSMC. This is a massive long-term risk. Compounding these technical difficulties, Fitch Ratings recently delivered a blow by downgrading Intel's long-term credit rating to BBB from BBB+ and assigning a negative outlook. This reflects a challenging global demand environment for chips and significantly weaker profitability growth expectations for the company, further pressuring its financial standing. Fitch explicitly stated that stronger markets, successful product launches, and substantial debt reduction are necessary for credit metric improvement, following a similar downgrade by S&P Global in December. Financially, Intel's Q2 earnings report delivered a major disappointment, a surprise-adjusted loss of 10 cents per share. This dramatically missed analysts' consensus expectation of a 1-cent profit, impacting investor confidence. This earnings miss, despite a positive surprise in revenue which exceeded estimates at $12.86 billion, triggered an immediate and sharp 8% decline in the stock price following the announcement. The analyst community remains largely pessimistic, with a consensus rating of reduce for Intel, contrasting sharply with a moderate buy for the broader computer and technology sector. Their average 12-month price target is $22.17, but the wide range from $14 to $28 indicates significant uncertainty and risk. Adding to investor anxieties, some analysts suggest that CEO Pat Gelsinger's current emphasis on cost-cutting measures might inadvertently stifle crucial innovation, potentially jeopardizing Intel's long-term competitive standing in a fast-evolving technological landscape. Moreover, Intel faces intense and growing competition from formidable rivals like NVIDIA and AMD, particularly in the highly lucrative and rapidly expanding artificial intelligence (AI) chip market, where Intel has yet to carve out a dominant niche. Reflecting these deep-seated concerns and market skepticism, the stock has already endured a significant drop of 16.17% over just the last 10 trading days, settling at $19.50 at the close of August 4, 2025, a stark reminder of the current bearish sentiment. This has created a challenging environment for any near-term recovery. Let's now translate these fundamental challenges onto the daily price chart to understand the technical implications and historical context. Looking at the broader picture, Intel has undeniably been caught in a severe long-term downtrend, plummeting from its impressive highs near $45 recorded in early 2024. The chart vividly highlights a critical inflection point around early August 2024. The massive red candlestick on August 2, 2024, accompanied by a staggering surge in trading volume, over 300 million shares, signifies an capitulatory event. This sharp, two-day drop, where the price collapsed from approximately $29 to $30 to the low $20s, losing almost 26% of its value. Directly corresponds with the negative Q2 2024 earnings report and established a new, much lower trading range for the stock. This event profoundly reshaped the market's perception of Intel. Since this significant breakdown, Intel stock has consistently traded within a defined bearish channel, characterized by a series of lower highs and lower lows. We can observe numerous attempts by buyers to initiate rallies, but each time, these efforts have been decisively rejected by sellers, causing prior support levels to transform into formidable resistance zones. Notably, the price levels between $25 and $27 have acted as a stubborn ceiling, particularly evident after the substantial, but ultimately unsustainable rally in February 2025, which peaked near $27.39. This zone is now a key long-term resistance to watch for any potential recovery. On the downside, Intel found a temporary floor around $18.13 on April 8, 2025, which stands out as a crucial multi-year low and a strong historical support level. This level represents the absolute lowest point the stock has traded within our provided data and serves as a significant psychological barrier. The very recent and sharp decline from above $23, specifically triggered by the Q2 2025 earnings disappointment and the credit rating downgrade, has once again driven the stock perilously close to this vital $18 to $19 psychological and technical support area. This indicates a high risk of retesting the absolute lows. The consistent high volume during these major downward movements, especially on reversal attempts, indicates sustained institutional distribution and a distinct lack of strong buyer conviction at higher prices, clearly reinforcing the bearish outlook for the foreseeable future. To gain granular insight into the current trading environment and immediate volatility, let's now transition to the 15-minute time frame. We'll specifically filter the chart to display the period from August 1, 2025 through August 4, 2025, which comprehensively covers the immediate aftermath of the latest negative news and the stock's recent performance. This zoomed-in perspective vividly illustrates the intense and sustained selling pressure that has pushed Intel down from its $20.30 level seen at the end of July. The sharp decline reflects market participants quickly pricing in the unfavorable developments. Observe the rapid succession of large red candlesticks and the notably high trading volumes, particularly during the initial hours of trading on August 1st. This signifies aggressive institutional distribution and widespread panic selling as market participants reacted swiftly to the credit rating downgrade and the Q2 earnings loss. From a short-term technical perspective, we can pinpoint immediate overhead resistance around the $19.80 to $20 psychological level. Multiple attempts to rally within this 15-minute window were quickly rebuffed, confirming this as a significant supply zone for any upward movement. Conversely, the current price around $19.50 is attempting to consolidate, with some signs of buyers stepping in to form a tentative immediate support around the $19.30 to $19.40 range. This suggests a brief pause in the selling, but this support appears fragile under continued bearish sentiment. The prevailing pattern of consistently lower highs and lower lows on this intraday chart reinforces that the immediate trend remains distinctly bearish, indicating continued downward momentum. Traders should keenly observe the volume profile. Any significant upward moves on low volume should be treated with extreme skepticism, as they often indicate weak bounces, while sustained high volume on downward impulses will unequivocally confirm the continuation of the bearish trend. This suggests further price discovery to the downside. Now, let's synthesize our findings from both the news and the technical charts to address the crucial question: should you adopt a bullish or bearish stance on Intel? Based on the confluence of recent negative news and the clear bearish technical indicators, the short to medium-term outlook for Intel appears overwhelmingly bearish. The persistent fundamental issues, including the critical delays and quality concerns with the 18A manufacturing process, the reiterated credit rating downgrades signaling financial strain, and the truly disappointing Q2 adjusted loss, collectively paint a grim picture of deep-seated operational and financial challenges that are unlikely to dissipate quickly. Furthermore, Intel's struggle to effectively compete in the burgeoning AI chip market, where it is clearly trailing more agile rivals like NVIDIA and AMD, represents a significant long-term growth impediment that is weighing heavily on investor confidence. For a true and sustained long-term bullish reversal, Intel would need to demonstrate not just successful restructuring efforts, but also consistently strong execution on future chip technologies and a tangible shift in market demand. This implies a very protracted and high-risk investment horizon, certainly not a quick recovery. Any reasons for a cautious long-term bullish stance currently lean heavily on Intel's immense scale, established global infrastructure, and its strong ties to government and defense sectors, which could offer a strategic bedrock over time. However, these factors are presently eclipsed by immediate market anxieties and competitive pressures. For active traders, understanding the critical price levels is paramount for informed decision-making and risk management. The most immediate and vital support zone to monitor is between $19.30 and $19.50, which is the current battleground for buyers and sellers. A decisive break below this range, particularly accompanied by heavy selling volume, could rapidly trigger a retest of the absolute multi-year low at $18.13, and potentially pave the way for further downside towards the $14 analyst low target, indicating a capitulation phase. On the upside, immediate resistance levels are identified around $19.80 to $20, representing the breakdown point from the recent news and a key short-term psychological barrier. A more substantial technical barrier lies at $20.50, where previous attempts to rally failed. Beyond these immediate hurdles, the previous significant breakdown level from July's Q2 earnings, specifically around $22 to $22.50, now functions as a formidable midterm resistance. Overcoming this level would require a fundamental shift in market perception and strong buying pressure. To bring our comprehensive analysis of Intel to a close, let's recap the vital price levels and potential scenarios moving forward. The critical support zone for Intel's stock spans from $18 to $19.50, while overhead resistance levels are found at $20 to $20.50, with more formidable long-term resistance at $22 to $22.50. Considering the persistent negative news flow and the clear bearish technical patterns across all time frames, we assess a high likelihood, approximately 70%, for Intel to retest the $18.13 multi-year support level in the short term. This bearish continuation would be strongly reinforced by any further adverse news, sustained high selling volume, or a broader market correction. A short-term bounce or a modest rebound towards the $20 to $20.50 resistance zone carries a moderate likelihood, around 40%. For this to occur, we would need to see a period of price consolidation with a noticeable reduction in selling pressure, rather than strong buying conviction. Traders should be wary of dead cat bounces. As for a more sustained long-term recovery, potentially pushing Intel towards the analyst average target of $22.17 or even higher, the likelihood in the immediate future is low, estimated at only 25%. Such a fundamental turnaround is entirely contingent upon tangible improvements in manufacturing, significant successful product launches, and a substantial positive shift in demand for Intel's core products. This will take time and clear evidence. For all traders and investors, it is crucial to remain vigilant. Keep a close watch on future announcements regarding Intel's 18A process and manufacturing progress, any revised financial guidance from management, and the evolving competitive landscape, particularly within the dynamic AI chip sector. These external factors will undoubtedly continue to exert significant influence on INTC's price trajectory and future prospects. Thank you for tuning in to Explain the Charts. We hope this deep dive provided valuable insights. Please remember to like this video, subscribe to our channel, and hit that notification bell to stay informed with our latest market analyses.